Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Bhatnagar, and this is where we will be telling you how the trade setup is for this new week which is starting off. Remember, it was a last volatile week that we had witnessed, which the Nifty ended on the Friday on a negative note. Remember, the markets have also reversed the last week's gains, falling nearly 1% this last week as well. So that was amidst the news-heavy environment influenced by geopolitical cues and, of course, the US election results as well. Except for IT and the PSU banks, all the sectors did pose losses for this entire week that was gone by. Now, remember, the street will now focus into this new week on the domestic factors, including the key macroeconomic data, foreign fund flows, and the final phase of the Q2 earnings season as well. Remember, India is also set to release the CPI and the IIP data on November 12th, with the WPI data expected on November 14th as well. So all the eyes will be on the domestic front this time around, and we'll just see how it pans out going forward from here. Good morning to all our viewers, and good morning, Shail.
Good morning, ladies and gentlemen. Welcome to Monday, and welcome to a new session on the Lal Street as far as markets are concerned. Let me just say it's not looking good at all. As usual, we'll start with our daily chart of the Nifty. 24,148 is where the Nifty shut shop on Friday. It was down about 51 points. But what is of critical importance is that the rally or the buyback that started from 23,840 will perhaps now be sold into the 21-day exponential moving average, the 100-day exponential moving average. Very strong call writing at 23,423, 323, 200 by bears is preventing the Nifty from moving up, and adding to that pain, ladies and gentlemen, our second quarter earnings. Just terrible set of numbers that have come in over the weekend, and this is in complete contrast to the rally that is happening on Wall Street. While overseas handover, especially from Wall Street, is phenomenal, record highs on Dow Jones, Nasdaq, as also S&P 500. The Russell 2000 index rose 6.5% last week, while all our major indices lost substantial ground, mainly on account of overvaluation and, of course, as I have said, terrible set of earnings that have been announced by two companies in particular, Asian Paints and Tata Motors. Apart from that, the negative cues coming in from US 10-year bond yield, from the dollar index, from gold prices continue to buffet Indian equities. We have a problem as far as the Lal Street is concerned, and that problem most likely will now get worse. Look at the Nifty, look at the Bank Nifty. Now let's come to Asian Paints. It's a disastrous set of earnings, one of the worst quarters that I can imagine over the last 10-12 years that Asian Paints has put up. Not only is there a contraction in volume, that means year on year Asian Paints has sold less liters of paint, which is a contraction of 0.3%. Operating margin has been squeezed tremendously, down about 500 basis points. There is a sharp fall in profit after tax, down about 44%, and sales too have slipped. This is against an expectation of rising volume, against an expectation of margins remaining stable, and of course a rise in sales and profit. So the accident that is waiting to happen will be on Asian Paints today, ladies and gentlemen. Already it's at its May lows, and this might get worse. Asian Paints is trading 18% below its all-time most recent high of about 3,300, but there will be pain on this counter. Ditto for Tata Motors, already at 805. This is also going to be a painful day for India's largest commercial vehicles maker. Apart from that, you have sets of earnings that are coming in. From the Nifty, we have Britannia, Hindalco and ONGC, and from the F&O space, we have Hind Copper, NMDC, Ramco Cement, Shree Cement and Jubilant Foods. We'll keep an eye out in particular on NMDC because the bonus issue will also be announced by the board when it convenes to discuss its quarterly numbers. Ladies and gentlemen, there is nothing to sort of provide you with anything except that more pain is in the offing. What was earlier presumed as a relation to the US elections is now morphing out into something completely different. Our problems are completely local, and they are because of overvaluations of Indian markets, and that is now coming home to roost. The best strategy, like I have always said, is to look at very strong quality Nifty ETFs and maybe one or two equity mutual funds. Today in the afternoon, we will be discussing two funds that you can look into if you want to buy US markets in Indian rupees. That is where the momentum is on the long side, and perhaps that is what should be reflecting on your portfolio. Apart from that, traders are advised to be very, very cautious on long side trades. All dips are being sold into, so let the Nifty open down, let it make an intraday low, and if you're a long trader, maybe buy that intraday low. We'll keep an eye out on that one as well, but it's not looking good for bulls on the Lal Street as far as this week is concerned. Sakshi will give you the FII number for the last 5 trading sessions. They've withdrawn something like 23,000 crores. In October, they withdrew 1,10,000 crore rupees, and there is this very, very severe possibility that November's total of net FII sales may exceed October's. Sakshi, what was the number for Friday as far as FIIs were concerned?
It was 3,404 odd crore rupees worth of selling that we saw from the FPI's shell, and this was the 30th consecutive session when the FIIs have pulled off money from the Indian markets. You rightly pointed out last 5 days have actually seen over 20,000 crore rupees worth of stocks being sold as well, and the selling has shown no signs of abating despite being on a constant selling spree for 30 straight sessions as well. The DII is mopped up, but only 1748 odd crore rupees as well as far as the Friday's session is concerned. Now, you did point out that the US markets did end higher, registering its biggest weekly percentage gain in also a year. This was largely led by the Trump rally that continues in the US markets. For the week, the S&P 500 was up 4.6%, Nasdaq up 5.7%, Dow up 4.6%. On Friday, S&P 500 created history, hit 6,000 mark for the first time. Dow Jones also ended higher and crossed over that 44,000 mark on an intraday level. You can see all across the board we did see green signs, 0.6% of a move on Dow Jones on Friday night, Nasdaq up by 0.09%, and the S&P 500 up by 0.4% as well. What we've also seen is that the dollar is continuing to getting stronger. Gold and crude was, however, down in trade. Gold was at $26.91 an ounce, and what we've seen for Brent crude at $73.87 a barrel as well. US 10-year bond yield continues to be at 4.3%, dollar index at 104.89 as well. So we'll keep on monitoring these key factors. Asian markets in the morning trading session, they were seeing declines. This was after China reported lower than expected inflation for October, sparking concerns about the recovery of the world's second largest economy as well. Not even that, Japan's Nikkei was also down by 0.4%, Kospi down 0.9%, Hang Seng down 2.2%, and Chinese index down by about 0.6% in trade. So all across the board, there was absolute weakness. At this point in time, we are, however, seeing some recovery in Nifty, which is now pointing out to an opening at 24,121, although that could be lower than what we had seen on Friday's close as well for the Indian markets. Remember, the stocks that you need to watch out for, of course, Shail has pointed out extremely disappointing numbers from Asian Paints. The net profit fell significantly by 42% at 694 crores. What we've also seen is that the volume for the decorative paints business has declined by 0.5%. Sales stood at 8,000 crore rupees. This was also down by 5.2%. All of this weak set of numbers were due to weak demand conditions, which the company has attributed to persistent rains throughout the quarter and floods in some part of the country as well. Let's look at Tata Motors. The net profit here fell by about 11 odd percent from last year to 3,343 odd crores. This was due to muted domestic demand and production constraints at JLR. The revenue decreased by 3.8% to 1.01 lakh crore rupees, while the EBITDA came down 12% at 12,159 crores. JLR profitability was impacted by temporary aluminium supply constraint and a hold placed in 6,029 vehicles for additional QC checks as well. Ola Electric, keep an eye out on that. The net loss has been reported yet again by Ola, although it has reduced to 495 odd crore rupees in Q2 FY25. This was helped by a jump in sales and lower raw material costs. The company has reported a net loss of 524 crore rupees in the year ago same quarter. Ola Electric has also reported a consolidated revenue of 1214 crore rupees. This is a 39% uptick on a year-on-year basis from 873 crore rupees in the year ago's period. Let's look at several other stocks that will be in focus. Wipro will be in focus. Premji Invest, the private equity firm of billionaire Azim Premji, has bought 1.6% stake in Wipro for 4,757 crores through an open market transaction. Premji Invest, through its arm Presume Trading and Invest Company, has acquired shares of Wipro through a block deal on the NSE on November 8. We'll keep an eye out on Wipro, how that one reacts. Let's also look at LIC. On the earnings front, it's reported a decline of 4% in its standalone net profit that came in at 7,621 odd crore rupees. What we've also seen is that the net premium income during the quarter has seen a sharp rise of 11% year on year to 1.19 lakh crore rupees, and that is going to be seen as a positive for the company. Divi's Laboratories has reported a net profit of 510 odd crore rupees, an uptick of 46.5% on a year on year basis. The company's Q2 revenue has come in at 2,338 crore rupees, which is a growth of 22.5% on a year-on-year basis. Aarti Industries posted a net profit decline of 43% year-on-year to 52 crore rupees in Q2. This is compared to 91 crore rupees in the last year same quarter. The net profit has fallen due to the rise in expenses and the operational challenges impacted the performance this time around. Revenues, however, seen a growth of about 12% to 1628 odd crore rupees, reflecting the company's push to expand its market reach and diversify its product offerings as well. HAL will be in focus. It's won a contract from Avionics upgrade for Dornier 228 transport aircraft for enhancing IAF's operational capacity. We'll keep an eye out on how that one reacts. It closed lower by 0.7% on Friday. Akums Drugs, a recently listed stock, will be in focus. It's reported a 104% jump in its profit to 66.7 odd crore rupees. The revenue, however, has declined by 12.5% to 1,033 crores. Affle India, on a consolidated basis, has reported a 38% jump in its profit at 92 odd crore rupees. The revenue has also seen a growth of 26% at 543 odd crore rupees in this year quarter. So those are some of the stocks that I'm keeping a keen eye out on, Shail.
Right, ladies and gentlemen, this is just the right time to get a very sensible view into the market. Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities, joins us on Zoom. Namaste Dharmesh ji, a very warm welcome. What is the mood on Dalal Street after the disastrous earnings that have come in after markets closed on Friday? This 0.25 percentage cut in federal lending rate has added a lot of enthusiasm to US markets, but is met with a lot of skepticism and selling across the world. What do you think is happening on the markets as far as Nifty bulls are concerned?
Yeah, Namaste Salji. Good morning, Sakshi, and good morning to all our viewers. See, mood on the last state is they are grappling with reasons to find why to buy this market in the near term. So medium to long term, I think nothing has changed structurally. There's a nip in the earnings, which we have seen in the Q2 earnings, and Q3 again, to my mind, would be tougher than Q2 because the theme of this Q2 has been more of a decline in the margins, which is likely to continue further because demand has not been there. Pricing power is missing. At the same time, inflation is picking up, and with this rate cut, which is happening across the board, I mean, US has done, Bank of England has done, these are inflationary in nature. So this will keep the pressure on the Indian companies as far as margins are concerned. Even China, the inflation has picked up, which though is a good sign for the general economy. But at the same time, if you are trading at a very high valuation multiple, so there's no scope of error out there. So valuation catch-up is what is playing out for Indian market, which is likely to continue further. The only thing which one should be monitoring is when this FII selling is likely to abate, which has not
Yeah.
happened till now. So that's a key concern out there. Apart from that, we have to live with it for maybe next 5 to 10 days more.
Right, Dharmesh, you pointed out correctly. Those are the key pain points, and the problem is that there is no recovery in sight, and there is no trigger that could point out to a recovery either from the flows perspective or from the earnings perspective, like you pointed out. Now let's come to the earnings, and two of the most disappointing earnings that we have seen: Asian Paints and Tata Motors. Let's start with Asian Paints first. One of the worst quarters, like Shail pointed out, in many years that we have seen. We have been seeing a continuous decline all through this year, while the management has continued to talk about that this has nothing to do with competition. What is your own sense of why such disappointing earnings have been coming about, and what is the way out from here?
See, anyways, Q2 is a tough quarter for all the paint companies because of the monsoons. But this time, flooding and other disruptions made it more tougher for them. I don't buy this management view that there is no competition because, see, unlike cement companies where the market is moving into more of a duopoly kind of a situation, here the things are different. It's not a duopoly anymore. More, I mean, larger groups are coming where the capacities will be put in. So it will be more of a volume and demand game. So supply will always be there. If demand is there, they will be meeting the targets. And now the growth factor will not be there. The type of growth factor Asian Paints used to enjoy, say maybe 10 years back. From last 7 8 years, they were the monopolist kind of a market share environment where they were trading. I mean, functioning at, which is not the case. So paint as an industry will be, a bit of a challenge for all the players out there, the new ones as well as the existing ones. What is good for these companies are the input prices are unlikely to go up because crude oil prices, which is I mean, crude is the main raw material. It's not going to go up and it's a structurally not downtrend. So that's good. More of a trading bet, but my own sense is difficult to see where the price valuations will settle, and then you can have this trading 10%, 15% kind of up move. Let them cool off. Let this entire space first find its fulcrum of the equilibrium position, and then one can take a bet. But structurally, we are out of the paints all the way. Tata Motors came out with a weaker set of numbers. Much has to do with that supply bottleneck where they have to quality checks and all. They could not ship most of their vehicles out there. Demand wise, I don't think there was a much of a concern except from the CV side of the market. JLR demand is likely to pick up with this all interest rate coming in, rate cut coming in US and Europe. Will end with China stimulus coming into play. So JLR sales are likely to be up. So declines in Tata Motor from there can be used for a SIP kind of buy. Here, the only caveat is the margins declined by 100 basis point, which is likely to see a further decline because commodity prices are firming up. So aluminum is one of the main element which they use in the vehicle manufacturing. That has firmed up. So margins may take a hit of more 100 to 125 basis point when they report their Q3 numbers. Having said that, let's not forget, then in a year's time, they are going to demerge their businesses, the passenger vehicle and the CV vehicle. And we are still working on the same SOTP based target price of 1350 to 1400 on Tata Motors. So, to my mind, if you have 1 year time frame horizon, this is a golden opportunity to buy Tata Motor at low levels.
Right. Yeah. So, ladies and gentlemen, it's a buyer's market, and it's a market where value is now available. Will the value get cheaper? Well, of course, only time will tell. But for those who wanted to buy Asian Paints at 3200 and were holding off because valuations were uncertainly high against the backdrop of rising competition and of course all the other problems that are besetting the paint industry, this is probably a time to at least start looking at. Keep it on your radar. It's available around May lows, and of course the opening quotes will also give you a chance, but just keep an eye out on it. Look at Tata Motors now at 805. Till about 3 months ago it was at 1150. These are all opportunities to at least start looking at blue chips. In the same breath, Dharmeshji, a lot of activity on the long side as far as L&T is concerned. A recent low of 3200 and now 3600 on the charts. How do you see L&T against the backdrop of continued weakness in the market? Will this be a stock that will at least help Nifty to sort of overcome the weakness in the market? It may not rise from here, but what are the chances of it falling now?
Actually, my LNT will give you a mixed set of picture, because at one time, I mean, their margins are also will be hit because of the rise in the input prices. There's no doubt about that. But at the same time, going forward, a lot of execution which could not happen either because of a strong heat or because of strong monsoons, flooding, and all. Then the elections, it will be executed from here on. Q3, Q4, we'll see a larger execution of the projects by the L&T. And budget, I mean, the government will be sitting on a lot of surplus money to be spent into infrastructure, because this year they have lost almost 6, 7 months. So that spending would not have happened, and that will come again back. So that way, structurally, L&T stands in a very strong position. But again, it's a value. I mean, valuations are high, so margins will play some kind of capping its upside in the near term. So as you rightly pointed out, I mean, I am totally agree with you that it will not slip from here. At the same time, it will be more of a neutralizing factor in the market, because a great weightage. And if you are looking for an investment bet, if you believe in the structure story of India, you should be buying onto this counter as well.
Okay. Dharmeshji, let's look at a few other stocks as well. One would be Divi's Laboratories, that brokerage houses are now penciling in big on after the earnings. Citi has raised its target price to 6850, talking about results ahead of estimates, right? Their commentary has been strong, and they believe that the company is going to be a major player in GLP-1 and the supply is going forward from here, which is going to be commencing in the next 12 months. Your own sense of the diagnostic space and Divi's Laboratories at that?
Yes, actually, I mean, this is the paradox of the market. I mean, at one sense, at one place, we're talking about the valuations, and you look at the pharma companies. Most of the companies have reported a good set of numbers. So first,
Yeah.
look on the positives. At the same time, most of these companies have reported a margin improvement, and that to 300, 400 basis point kind of a margin improvement in operating. That suggests that in the overseas, I mean, US and European market, the price erosion which was happening with their products has stalled. So now there are no price erosions. In fact, they were able to have slight price hikes in few of the select generic medicines which they were selling there, and that is reflected in the margins. Growth has been decent. But none of these pharma companies, including DBs, report a ROE of more than 15%. The ROE, return on equity, is 11 to 15%, whereas PE multiple starts from 20 to, for example, in DBs is trading at more than 80 PE multiple currently. And so 6,800, it will be more 85, 86 kind of a PE multiple. Just because market is in a spot right now, and these are safer bets, at least these numbers will continue in the future. You are hiding out there. So that is a clear view. I mean, as a trade, it can work out for 5, 7% from current levels, be it DV, Cipla, or Lupin. They all reported with a good set of numbers. But structurally, at these valuation multiples, I think the day market stabilizes and starts to move up, we will see a sharp profit taking happening in pharma counters, and this money will move into the cyclical play which we were betting on.
Okay, got it. We'll also take one more question, and that is on the mid and the small caps, particularly Dharmeshji, to understand, where do these spaces go from here particularly? And are you finding any confidence at these current valuations, or is there still some more downside to go?
So actually, mid and small cap, you have to be very stock specific, and you should have a horizon of more than 1 year. Because in between, I mean, next 3 months can be dicey for them. But one stock which I'd like to highlight just before the pre-open is Life
Yeah.
Insurance Corporation of India. So they came out a very, very strong set of numbers, available at almost one-fifth of the valuation multiple of their peers. The value of new business went up. I mean, the growth was 47%. Even the margin of new business premium went up to 18% from 14.6%. So 920, 930 is a steal to my mind. And if you're a structural buyer in this, keep on accumulating the stock at all these levels. It's a doubler in a year's time frame. So That is what we have been recommending to our clients just on the valuation. Even if it's not re-rated, bought at par, that is the scenario which is likely to be. And with digitization, which this company is embarking on, if that takes place, the stock prices can go further higher.
Right, ladies and gentlemen, the markets are with us, and surprisingly, it's a green tick. Really thrilled that it's a green one. 11 points higher on the Nifty. Let us see how long it continues. But the stocks to be looked at is Asian Paints. It's down 10%. Remember, it's an F&O stock, therefore, the first downtick is limited to 10 percentage points, 24.92. And with it are falling Berger Paints, 0.84% lower on Berger, 500. So keep an eye out on Asian. Let's look at Tata Motors, a disastrous set of numbers, 6.8% lower at 750. So these are the two earnings boys that we are keeping an eye out on. The Nifty is now slowly inching towards flattening out. Let's look at stocks which are heavyweights and are providing some support to the Nifty. Yeoman's Job by HDFC Bank, 26 points higher, 1781. This is the highest weighted stock in the Nifty, as also in the Bank Nifty. It's being used by very intelligent institutional traders to give you a feeling that all is well in the index, where they bash up other stocks black and blue. So HDFC Bank is up 25 rupees. Let's see what Reliance is doing. At the moment, flat, 1283. Let's look at ICICI Bank in the green, 3 rupees 20 higher, 1262. And in our enthusiasm to discuss Asian Paints and Tata Motors, we've forgotten the wonderful numbers that State Bank of India came up with. 6 rupees 85 higher, 851. This is a number worth discussing, especially against the backdrop of very, very strong numbers coming in from PNB, Canara Bank and Bank of Baroda ahead of SBI. Now, what is in pain? TCS, 62 rupees lower, 4084. How about Infosys, 23 rupees lower, 1806. So at the moment, it's not looking all that bad on the Nifty. 64 points lower at 24,083. Today's battle will be at 24,000. Remember, over the last week, the bears have captured 24,300, 24,200, 24,100 with very, very heavy call writing. They are just refusing the Nifty to let go above 21 or 100-day moving average. Okay, now let's pay attention to the most active list and see what's happening. It's a sea of red. Axis Bank 2.6% lower, 1130. You have a strong move coming into Manappuram Finance, 2.9% lower, 146. What's in the green? 0.5% higher on NTPC. Remember, this is the IPO rub-off. We have the NTPC green IPO getting a nod for 10,000 crore rupees from SEBI, and that's a big plus. You have that's the only sensible stock that I can talk about. So that's how it is, ladies and gentlemen. Now Nifty 71 points lower, 24,082. Dharmeshi, I hesitate to take a buy call from you because it doesn't make any sense, at least to me. What are you advising people who have SIPs in place as far as mutual funds are concerned? Today, Amphi data will come in, and as Sakshi has pointed out, 30 consecutive sells by FIIs have been matched almost equally by DII purchases. Is there a fear in your mind that now retailers will stop their SIPs, and should they?
Shall I mean, I have a different fear in my mind, but the fear was before this sell-off started in the month of October, mutual funds were sitting with a lot of cash to be deployed into the market, more than 1 lakh crores. So that's been totally put into place. Now, if you look at the day-to-day data, whatever SIPs are coming in, that is they are putting in the market. So run rate is around 2,000, 2,500 crores a day, and that FI is selling more than that. So now a bit of a more FI is selling will see a real gash in the market. I mean, then you will have long cuts because buying firepower which was there with this DIA is now on the other side. So that's one problem. And as far as SIPs, incremental SIPs by people are concerned, they are maintaining the SIPs. In fact, most of them have increased their SIP marginally. So the people I know, the people whom I interact, they have increased it. But if the index falls below 23,000, which I am not suggesting, but if it falls below that, then this NEVs will turn negative for most of the retail player. And then the fear which you were talking about will definitely come into play, because this is the first time when this new generation of investors, which is 1 or 4 to 5 crore kind of people who have come into the market, will test the down cycle of the market for the first time. Till now, what has been there is the profits have been shaved off, but still the capital is intact and they are still earning. And that, a good feel fear, has not gone up, gone away, that they can see even losses. So let's see how the market behaves. I am just hoping that it does not go down to that level.
Okay. Well, we also have Vaishali Parekh now joining in, Vice President Technical Research and Analysis at Prabhudas Leeladhar. Warm welcome to you, Vaishali. Good to have you with us. Tell us what's the sense that you get on the markets this new week as well. Do you think it will be better than the last week, or are we going to see some more pressures coming in? A lot of external factors again will be important to track between the Nifty and the Nifty Bank. Are you finding anywhere confidence?
Very good morning, all of you. But I think what we saw on Friday, the selling pressure was quite a
Yeah.
bit and it was very decisive. And when you talk about individual sectors also, they are showing, most of them are showing a lot of weakness. So the trend is definitely down. And this has started from last Monday, as we saw that decisive levels were broken and the continuation still is on. So I would say very likely that we will be looking at 23,800 and perhaps even lower. So bias is still sell on rise.
Right. Uh, Good morning, Vaishali. I so wish that your lady luck comes to the fore today. A lot of pain across frontline stocks. Would you comment on SBI as far as charts are concerned? Very strong set of numbers. We'll get Dharmesh ji a little later. But what is SBI telling you?
So I would say SBI, we have seen a little bit of a rally. Still, there is no trend reversal. I mean, I think it is still okay. 830 should be held on. If 830 breaks, then I think we will be seeing further selling coming in this as well. But till then, I would say it's a hold. And well, it would be a range bound for now. 865 to 830 would be the range. A decisive move either ways would define the trend.
Okay, got that.
Dharmesh ji, bringing you in, how do you react to second quarter earnings by SBI, India's largest bank? And of course, that wonderful statement that the management came up with, saying that they expect an operating profit of 1 lakh crore rupees per year on the horizon.
Thankfully, really, there was nothing negative in the numbers, and they were mostly in line with the estimate. There are two factors which I'm keenly watching on the large four banks which they have reported numbers: HDFC, ICICI, Axis, and SBI. The key driver of the profitability was treasury income, which will not be there in Q3 because they have booked most of this income in Q2. And the factor of SME and MSME segment, the unsecured on the retail side continues to be there. Even the management pointed out that apart from MSME segment, all other sectors were doing fine for SBI. So that is a cause of concern. This quarter, they reported an excellent set of numbers with lesser slippages and credit costs also coming down. Q3 has to be watched into. But usually what happens is one quarter you are able to tide away up with, but next quarter it's difficult to get away with. So most of these banks have exposure to all these segments. And with the type of problems which are happening, delinquencies are there. If you talk to dealers or NBFCs, you find a general notion that payments are not coming. And there are multiple reasons for why they are not coming. Most of the government schemes which were there in place, the money has not been reaching to them, and in turn they are not paying it back. So this is a problem which is happening. So I think maybe after the state elections through, something may start flowing in from the government side. The cycle may be held, but overall, you have to be cautiously optimistic. I hate to use this word, but this is how things are placed even for SBI.
Okay, understood that. Let's look at how the pre-opening is shaping up. So settled at 24,087 for the Nifty, about a 0.25% of a dip. Only Pharma, consumer durables and the Nifty bank seem to be holding up some promise in today's opening session. Stocks which could be opening higher are Britannia. Remember, the Q2 results will come in today. It's the stock is indicating an opening above 5,800 levels. SBI Life Insurance, HCL Tech, Sun Pharma, State Bank of India seem to be the top 5 up movers, top movers as far as the Nifty is concerned in the pre-opening session. Let's get Dharmesh ji, and of course then we'll go across to Vaishali as well. Britannia particularly, what is your expectation within the FMCG pack? We've so far heard from the other big heavyweights that have come out with the earnings so far, worry about the volume growth, concerns about, demand, especially in the urban areas as well. How are you really looking at this space shaping up for Britannia? What is the expectation? How should one view it?
So again with Britannia, I mean, if you look at the product profile, they are more urban centric, and they, even if they report us relatively better volume growth than most of its peers, so with the kind of stoppage drubbing the peers have taken, this can become a good buy. But overall, I think should be a decent set of numbers. I'm not predicting any numbers target right now because earnings are around the corner. It would be launched immediately. But if you ask me, FMCG as a space, we are not looking at buying it from, say, investment perspective. Trading place can always be there, but even after such a huge correction which has taken place in, say, Nestle or HUL and the others, Dower, we are not looking at this space to buy in the near term. So we'll see after Q3 what to do with them.
Vaishali, what's your view on Bank Nifty given the strength that we are seeing, primarily earnings driven in SBI, ICICI, HDFC Bank to some extent, and of course a lot of momentum in the PSU boys. How is that reflecting on Bank Nifty?
So see, Bank Nifty has so far always comparatively shown strength. So if we sustain at these levels, then I think we can expect a bounce in Bank Nifty. And having said that, I was just looking at Kotak Bank, HDFC Bank, and so far even SBI. They are all still quite stable. So I would say that Bank Nifty, I don't see much of an erosion. But of course, if 51,300 levels break, or more so 51,000 levels break, then we are back to the grind and we will see it further downside. But till then, I would say Bank Nifty is still one of the stronger companies. And especially once we talk about PSU banks, PSU sector on the whole is showing signs of bottoming out. But these days, it's hard to tell whether the supports are going to be respected or not.
On SBI, what would you do today, Vaishali?
So actually, we have recommended this stock right from 800 levels, and our target is around 880 to 900 to start with. But now post results, let us see how it reacts. As I said, 830 would be the near-term support.
830 will be the near-term support. Okay. The last week, what we've also seen, Vaishali, is a lot of strength coming back onto the IT names. Do you think at least that can continue this week?
So IT is attempting to sustain, and we saw last week, of course, it was doing very well. But currently the sector on the whole is showing resistance. What we need to see is IT index needs to sustain above 42,500 levels. So right now it is showing resistance of the cluster of moving averages. So if it sustains above 42, 530, 550, I think we can see a good up move coming in this.
Right. Vaishali, what about Tata Motors now resting on its 21-month moving average, 801, not much of a disappointment in pre-open. What are the charts of Tata Motors telling you?
So I would say it has, as you said, it has come closer towards the support. So 790 would be the final support. And I think the negative news all, according to me, are factored in. So if 790 should not break, if 790 breaks,
yes,
then that goes
absolutely.
further.
Ladies and gentlemen, as I have been pointing out to L&T all of last week, there has been a bounce. Maybe the stock that you should look forward to as far as adding to your portfolio is Tata Motors, of course in piecemeal, but the markets are now with us. A 100-point gap down on the Nifty, 24,038. A 200-point gap down on Bank Nifty, 51,372. IT is on a back foot, and the NSE 500, the broadest measure that we have, is opening 0.5% lower. So, ladies and gentlemen, let's not try and chase this gap down, but it's getting worse. Let's look at what Asian Paints is telling us. Down 8.5%, 25.39. This is the lowest since early April that you have in front of you. What is Tata Motors doing? It is up. Why it is up will be visible on the charts, which we'll explain a little later. But the pain that was in Tata Motors seems to be over. The markets are hoping that this is the last painful quarter. Let us see how it goes. But keep an eye out on Tata Motors on the long side. Let us see how it goes. Okay. HDFC Bank in the green. Let's look at index heavyweights. 4 rupees 20 higher. What is SBI doing? Flat, 842. How about Reliance? Down 14 rupees at 1269. What is TCS and Infosys doing? Flat on Infosys, 50 paise lower. TCS 14 rupees lower. So amongst the top 10, SBI and Tata Motors are in the green. It's very, very interesting on Tata Motors. And the rest of the index heavyweights are down. Lever is down 4 rupees. ITC is down 70 paisa. Axis and ICICI Bank are slipping, 16 rupees and 8 rupees respectively. L&T is down 28. So HDFC Bank is being used as a fulcrum. Let's look at NSE 500. What are the pain points? Let's look at them first. Divi's Lab, earnings disappointing, 2 percentage points lower, 58.03. The stock has already run up very sharply, a bit of profit booking. Indian Hotels is something that you should look at, ladies and gentlemen. 1% higher, 740. Okay. Shipping Corporation of India, 9% higher, 8% higher, 229.40. What else is in the green that needs to be marked? Okay. This is Biocon, 4 percentage points higher, 333. Gland Pharma, Oro Pharma. So you can well imagine that the entire market is now defensive, and it's pharma that's ruling the roost. We track 19 indices for you, and out of 19, 18 are in the red. The auto index is showing signs of life, but nothing much to talk about. A quick one from you, Vaishali. Top pharma pick.
Well, I would look at Cipla, Sun Pharma and Lupin.
Okay.
So for now, it is Sun Pharma.
For now, it's Sun Pharma. All right. We'll keep an eye out on that. ITI also 3.5% higher. Aurobindo Pharma from the Pharma pack is 1.5% up. Ashok Leyland is pulling up higher, about 1.3% higher in trade right now. We have Maruti and MRF as among those top movers within the F&O space as well. What else is moving in the F&O space is Biocon and PFC also. Sharp moves being seen on that one. Biocon up by 4.4% in the F&O space. PFC also up by about 2%. And then Power Grid is also moving up in trade, about 1.5% higher within the F&O space. Vaishali, PFC for you, how are you really looking at it?
So, well, PFC is consolidating. There isn't much happening. We have seen a good corrective move. So, I would say the near-term support would lie at 436, and we may see a bounce coming. It needs to cross 475. So, for near-term, I think it's a positive bias for 475.
Got it. Let's get back to Dharmeshji. Dharmeshji, it's the auto space that's definitely in the top gear today. Among those few which are higher, Maruti is actually inching up almost 1.1% higher as the top mover on the Nifty. We have Ashok Leyland that's now up 2%. MRF, Tata Motors, Balkrishna Industries, M&M, all on up and about, and even the auto ancillary names are actually buzzing in trade. Stocks like PPAP or automotives, that's up 8% in trade today as well. Autos and the auto ancillaries, do you think one should be keeping an eye out on here?
So as I said, Maruti and Tata Motors look attractive at these levels. So I would say, it's good to accumulate.
Okay, we'll get Dharmeshji's view on the auto space now. Dharmeshji, yours.
Yeah, yes, okay. I mean, this has more to do with today's commentary of Ashok Leyland, management commentary, where they guided that going by the run rate, the first two quarters which has happened, 6 to 8% kind of a growth can be expected in the second half of this quarter, if they want to end the year with 0 to 3% kind of a growth for the industry. So, to my mind, even it looks quite logical, and with the kind of price dropping which we have seen in most of the counters, there is definitely a chance for buying opportunities out there. But apart from Tata Motors, which we have already discussed, the other company which looks very attractive is Mahindra and Mahindra. So M&M, all the UV segment is firing up really well, and at the same time, tractors now on with this monsoon play being over, and after the harvest comes into play, farmers will get the money, and then the tractor buying season will commence. So Q3 and Q4 is likely to be a good for farm equipment segment. So M&M is one counter which is available at reasonable valuations. It's still not gone top of the level. So 15, I mean 10 to 15% kind of an upside for next 3 to 4 months is expected out there. It's a stock to be bought on every decline and to be held in your portfolio.
Ladies and gentlemen, it's Tata Motors that's shining all the way, and we have a fresh up move, now 1.9 percentage points higher, 820. And within the F&O space, Tata Motors is the second most active counter. Of course, Asian Paints takes the first one. And the reason why Tata Motors is looking good on the long side, ladies and gentlemen, is on the monthly chart. My apologies, just one moment. On the weekly chart, it's just taken rest at the 100-week moving average after falling about, let's just see what the correction is, 33%. So for the mathematically inclined, 33% is a Fibonacci number. On the 1 month chart, it's taken support at 21-month moving average, and it's doing well on the 3-month charts as well. Not much of a support in the long term charts, but of course you have 765, which is the 9-quarter low. Let us see how it happens, but enthusiastic response by the market as far as Tata Motors is concerned. Let's look at the pullers and draggers on the Nifty. It's now down just 62. So a bit of buying at the lower level. Maybe it's just short covering. Okay, Tata Motors contributing 7 points to Nifty, M&M contributing 7 points, SBI contributing 5, Power Grid and Maruti. So it's auto all the way as far as Nifty is concerned, and of course pulling it lower is Asian Paints contributing a negative 27 points, ICICI and Axis Bank contributing 20 points in the negative, Reliance and Bajaj Finance. So it's not looking good, but there are certain pockets of good activity that are happening. Tata Motors is the second most active counter, 352, and Asian Paints is already showing signs of weakness, 7.8% lower, 342 crores. Vaishali, anything else that you've noticed in the market?
So IT sector is showing strength. I think TCS, Infosys, both. In fact, even
Yes.
LTI, Mindtree. So all these are supporting the market right now. And for a change, Bank Nifty is showing weakness, but Nifty as compared to that is quite okay. Well, of course, the trend is down, but right now IT is supporting.
Okay, got it. Trend is moving up now, 1.3% higher. Let's get Dharmeshji's view on the stock. Dharmeshji, last 5 days, I think the stock has been continuously on a downward move. It was the top loser on the Nifty last week as well. It's down by about 25% from its peak of 8,345. How have you really looked at trend over this declining trend? Have you added the stock more? Do you think this has now come in a more attractive zone right now for those who missed on the upward trajectory? Is this space looking attractive, or should there be some more consolidation before one really jumps in?
Sakshi, if you look at trend and if you remember DMart when it was
Yeah.
listed and the way it went up, so the reason was again it was like 100% kind of a compounding on the profitability over say next 3 to 5 years, which was expected from DMart, which didn't happen. It earlier phase it was 50% kind of compounding and now it was 25, 26%. Same is happening with trend. Nothing wrong with the numbers. Business wise, they have been doing phenomenally well. Numbers were excellent, but when compared to expectation and the valuation multiple which the company is enjoying right now, so there was a huge disconnect. So I think you should give more time for trend to consolidate. Business wise, you will keep on hearing good set of numbers, continuity of the same. But valuation concern, I mean, it has suddenly been realized by market participants that it's too high a valuation to be given to trend. So wait for some more time. I mean, if 10%, 15% more correction from here, then definitely it will become attractive for buying perspective. But as of now, I think we should give it a pass.
Okay, ladies and gentlemen, I think attention should be given to NMDC. This is ahead of earnings and ahead of a bonus announcement. The counter's down 6%. Okay, it's down for the third day and now at some good quality support zones. This is an interesting chart. Let us see what Vaishali offers in terms of her view on NMDC. Although it's ahead of earnings, so it's really not a view that we should take, but very, very strong support. Vaishali, what are the charts telling you on NMDC?
So long-term charts, if we see for quite some time, we are seeing that it has only been consolidating. So I would say 220 would act as a near-term support, 218 rather. So 218 would be the support and 247, 248 is the resistance. The candle that we are seeing today, I guess we may see some more correction. But what is important is that 218 should not be broken from here on.
Okay. Dharmeshji, let's circle back to Asian Paints now. The stock has been further slipping and we are seeing a downtick on the stock now. Almost about 230 rupees lower, 8.5% lower now, 2538 on Asian Paints. Of course, we do understand this is a reflection on the earnings which have been disappointing. But for somebody who has witnessed the long-term wealth creation story in Asian Paints, for decades, do you think this may be a right point for somebody who still has a further long 5-10 years perspective, because Asian Paints continues to be the largest player. The revenues that it has is still, for the others put together also, they don't match up to the kind of revenues. So it's still the largest player. Do you still feel that one can look at this as a buying opportunity on Asian Paints at all, or is there going to be more pain that one should wait for?
Sakshi, you nailed it when you said it continues to be. So it continues to be, but whether it will continue further ahead is a question to be answered. And to my mind, the answer is no. The market share, they will lose to players like Grasim and JSW. Everybody is coming. So, I mean, that's the clear answer to that. So, from trading bounces, say from here to 3,000, if can it be happening in future? The answer is yes. It may go back to those levels, 15%, 20% kind of an upside can still be there. But paint is again, as I said, it's a different play from what is happening in the cement sector. Here you are getting more bigger players, and the pie is getting shared by others as well. So this trend is likely to continue, and it will be tougher for these companies to enjoy the kind of margins they're enjoying and keep up with the market share growth. So that is where it's more of a trading play now rather than a buy and hold kind of a play. So 10-year kind of a story, I won't be buying Asian Paints.
So, ladies and gentlemen, Asian Paints is now available at June 2022 lows, which essentially means 2 years plus, say, another 3 months, 4 months. That's the sell-off. and Tata Motors continues to gather strength. So you can well imagine how quality technical charts on the longer term portfolios and time frames, monthly, weekly, quarterly, makes so much sense to keep an eye out on, and that's where the bounce is coming in. A strong show by shipping counters. SCI, there is a new shipping policy that has come in, and SCI is running hammer and tongs, a very strong move coming in today, 10-11% higher, 22 rupees up. Please keep an eye out on this counter, one of the cheapest available shipping stocks in the market. What is moving up? Any names that I can take in from the gainers list? Okay, JSW Energy, 750, 5 percentage points higher. This is something that needs to be looked into. There is a strong move that is coming into Biocon, 4.5% higher, 336. Biocon for you, Vaishali, again the pharma tag on this one, and of course a fairly decent uptick in trade today. Is this something to look at, or should we stay away?
I would think so because now I'm looking at the weekly chart, and weekly chart it still continues to make higher bottom. It's sustaining about the 200-day period moving average also on the weekly chart. So I think 300 makes a very good support for a longer term perspective, and I think it should be accumulated. Of course, it's not a quick moving stock, so to have patience and look for a target of 400, 420. And when I'm looking at the daily chart also, the stock has corrected, currently bouncing back from the 200-day moving average. So I think it's worth it to take a bounce from here.
Okay.
And we are welcoming back the IT index into the green, Sakshi. 184 points higher, 42,235. Remember, a record high on Nasdaq, plus a very strong show coming in from Mr. Azim Premji. He's bought back Wipro, his company, in a block deal of about 4,000 crore rupees. That's added to sentiment, 570 on Wipro, a third of a percent higher. But strong moves on HCL Tech, which are now in the green, moving about 0.8 percentage points higher. TCS Infosys in the green, very strong support by Infosys. Remember, it's the fourth heaviest weighted counter on the Nifty, and I'll give you some more data on Infosys. Now it's the top contributor on the Nifty, adding 11 points to its tally. HDFC Bank is adding 11 points, Tata Motors 8 points, TCS 6 points, HCL Tech 3.4 points, and of course Wipro about half a point. So keep an eye out on the IT boys. These are the ones that are helping the Nifty. Now 200 points higher. Any dip that you would want to purchase on IT, Vaishali, what looks good?
So I do like LTI Mindtree. I do like Wipro. Wipro also has sustained very well above 550. So I think this is also a good buy. But for now, fair value wise, I would say LTI Mindtree.
Okay,
And
got
TCS,
it.
of course, TCS has shown good corrective move, very good levels to start buying.
Okay, got that. So that's as far as the IT pack is concerned, and that should be definitely kept on the radar. What's moving up in the PSE index, ladies and gentlemen, is PFC, 4% now higher at 467. REC also is now up 2%. So the erstwhile power favorites are coming back. Power Grid and NTPC are also inching up now in trade. Let's get Dharmesh ji into the conversation. Dharmesh ji, how are you looking at these erstwhile favorites, PFC, REC, after the consolidation which has played out? Should one again start lapping onto them?
Yeah, I mean, the earnings was good. At the same time, the growth trajectory is likely to be there, and they're the proxy play to the power theme on the whole, both PFC and REC. So with the kind of correction which we have seen earlier, they become a good value buy. So from trading perspective, as from investment perspective, I think if you are holding it from say a year kind of a time horizon, you can get decent return, 20% plus kind of a stock price traction out there. So the story remains same. I mean, the entire 300 gigawatt of capacity has to come into play, and for that, around 12 to 15 lakh crores of debt would be needed, apart from the 25% balance equity, and these are the guys who fund them. So the business is there in place with the margins intact.
Okay, Dharmesh ji, we will thank you on that note for being with
9:35,
us.
ladies and gentlemen.
Thank you so much for being with us and sharing your views, sir.
Thank you.
Okay. Well, there are several other stocks which are also on the move now. The real estate pack is now showing us some strength, and some stocks within the pack, including macro tech developers, are now moving up. Vaishali, last week we did see, DLF perform well. How are you looking at this erstwhile wealth creator, macro tech developers at the current levels, 1190?
So yes, this has been showing signs of improvement. We saw after making a low, even the indicators were oversold, and I think for now it is consolidating. So I think 1150 would act as a good support. And once the stock moves above 1240, I think it's back on track, and we would see this stock moving towards 1400 levels.
Okay, Life Insurance Corporation, ladies and gentlemen, a very strong show in earnings, and again below 200 DMA. These are the stocks that you should be looking at. Even weekly charts show some kind of respite at maybe 50-week moving average. The stock has corrected very, very sharply from 1217, which was in late July, to 929. Vaishali, backed by earnings, what are the charts of LIC telling you?
So we have seen, even now that we are talking about the weekly chart and all, it's just consolidated, it has retraced, but the important support lies at 860. So I think this support, as long as this support is respected and we see a bounce coming from here on, the trend should continue with its upward move and a good level to buy. And this would also make a good favorable risk reward ratio.
Sakshi, the Nifty is in the green. It was just 8 points higher, and the Nifty bank is also edging into the green. Look at the Nifty 500. This has moved from an intraday low. Just a moment. The Nifty's 500 intraday low was somewhere like 22,500, and in a span of just maybe 15-20 minutes, it's moved from a low of 24,485 to 22,606. This is really, really interesting, and of course you have a strong one coming into the PSU space. ITI up 7.5%. The reason why I mark ITI, the telecom giant, is that it's the top traded counter on the NSE. When was last that seen? I don't remember, and it's rallied from the past 3-4 trading sessions, 240 to 327 in 3 trading sessions. So that is something that can be looked forward to. Consistent buying in Tata Motors, now age 24, 2.4% higher, and of course you have stocks such as Ashok Leyland, 3.5% higher. There is PIX Transmission. I don't remember this one for a very, very long time. 20% higher. बताइए आज 20% सर्किट लग रहे हैं काउंटर में. 2019 and Payne revisiting Cochin shipyard, 4 percentage points lower at 1390. So this is the state of play at 940, ladies and gentlemen. It's not panic stations. IT and banks are supporting the Nifty, and of course piecemeal you see strong moves coming into counters such as Thermax, such as Tata Motors, such as PFC and Biocon. Sakshi.
Okay, got it. Let's understand from you, Vaishali, how are you looking at the charts of JSW Energy? It is the top mover in the Nifty Next 50 list, up 5% higher in trade today. And volumes are also good. How are you looking at this one?
In fact, the stock has already given a breakout above 741. So if it's sustaining, the volume is, yes, for the day start, it's pretty good. So I think if it's sustaining, it's a very positive bias. This can go towards 800 levels to start with.
Okay. Another one from the broader markets list is Shipping Corporation of India, which has moved up now even 9.8% higher in trade, up from the morning opening gains as well. What's really happening here on the charts? Do you think it requires a merit, Shipping Corporation of India?
So, well, since a couple of days, we are seeing a good volume pickup and all, and it's trending. So I would say it should still surge higher. 250 would be the near-term resistance. Once we see the stock move past 250, I think it's ready for 275.
Okay, got it. So that's the view that's coming in, and right now the stock is hovering at around 233 odd levels. This is different. The stock that we are talking about is Shipping Corporation of India, which is trading at 233, and the price change is about 21 rupees odd or so. Almost now a 10% uptick for Shipping Corporation of India. Yes, that is the right stock that we are now showing, 10% higher. 233.8 on this one. So that's a strong move. PPAP Automotives, remember viewers, I started by saying that it was 8% higher. It's hit a 20% circuit. It's the top mover in the gainers and the losers list as well. Today it moved up 20%, 221 odd levels right now for PPAP Automotive. We'll continue to keep an eye out on this one as well. Very strong move that has come in today. Is there anything else that's moving in the broader markets? Yes, EIH, that's nearly up 5%. That's also moving up strongly. You have Samhi Hotels, that's up 6.6% in trade. That's another one that is doing very well in the broader markets. Alembic Limited is up 5%. That's also doing well. ITI, I had pointed out, that's also up nearly 7% in trade. Then do we have anything else worth mentioning? These are the large stocks that are actually doing very well. 63 Moons Technologies after a long hold, 5% higher. Again, that IT play that is coming in. These are the stocks that are buzzing. Anything else, Vaishali, in the broader markets that catches your attention?
I think PNB Housing, have a look at PNB Housing.
Okay.
PNB Housing, actually, we are seeing some volume pickup happening, and I think, well, let's see. This can go towards 1020 levels if the buying continues.
Okay.
But yes, Tata Motors is
942, ladies and gentlemen. It's getting. Yeah. Vaishali, I remember a lot of our conversations on Tata Motors, and yeah, of course. What a bounce it's showing from many support levels. Let us see whether that lasts or not. But as I said, there is always the question of margin of safety, and is it worth buying at 825 post disastrous set of numbers as it was at 1150? Yes, of course. But should you buy all of it today? Not at all. So this is the game that the markets teach us. Be fearless when people are full with fear, and this is probably an opportunity which your independent financial advisor will tell you more better, that at 850, sorry, at 825, 817, 800, 805, Tata Motors is a better stock to look at than what it was many years, many months ago. Sakshi, do you want me to mark MRF 4% higher? 1,24,000 only.
Absolutely. Why don't you share the anecdote that you have shared with me, with all our viewers, and with Vaishali also, Shail?
Vaishali, I have to meet in person. We have only been threatening to meet each other. It hasn't happened, but that's a terrible anecdote to have in one's life, and maybe when I write something about it, I'll also send it to
please
Vaishali.
do share.
But
Please do share.
no point sort of making it public.
Looking
Abhi nahi, I'll let you know. But Sakshi knows how terrible an encounter I have had with the MRF. But such is life. for every MRF there is a Maruti, for every MRF there is an ICICI Bank, and for every MRF there is a Tata Motors in my long term portfolios. So that's how it is, ladies
Very
and
well
gentlemen.
explained.
We are now
Very
at
well.
9:44. Yes, thank you. The Nifty is trying to breathe above water. Now just 1 point lower. It's the IT index just taking it away. 42400, 342 points higher, and it's a very strong show coming in from Infosys, TCS. Infosys is now contributing 13 points. It's the top contributor on the Nifty on the green side. Let me do some another jugglery for you. I'll tell you how much Nifty IT is being edged up by Infosys. Just allow me 1 second. Refresh. Okay. Infosys is contributing 131 points to IT Nifty's 300-point rise. TCS is contributing 100 points. So these are the two stocks that you have to look at. Strong move coming in Wipro. I think Mr. Premji has voted with his money and bought back a substantial chunk of Wipro in a block deal. I think 4,400 crores worth of block deal. But apart from that, it's RECL which Sakshi has marked, Power Grid that we can look at, 323. These are the stocks that haven't corrected much. Power Grid for you, Vaishali, low beta, a very quiet overachiever, and today at 323.
So yes, I think it's even a good opportunity to buy even at these levels. We just spoke about this 300 would act as a very good support, and the stock needs to move above 340. So till then it is just a range bound move, but above 340 we are back for a good strong upward trend.
Okay, got it. Let's look at the new age internet space as well. Some of them are actually doing well. Card Trade Tech is up by about 3.5% today. Info Edge, of course, the erstwhile internet play, is 3.5% higher. You also have Nykaa, that's FSN e-commerce, that's also showing us some strength, about 2.2% higher in trade. Although Zomato is down by about 0.9%. How would you look at this new age internet space right now, Vaishali? Anything that takes your attention?
So well, you spoke about card trade. It's already run up. So to
Yeah.
those who are having it, should continue holding. No point buying right now, because I don't think. I do like Nykaa currently at these levels, showing a good bullish pattern. I think 180 as a stop loss, and 200 needs to be crossed. I guess then that is giving us further targets of 220. But well, we spoke about Paytm also. Paytm is doing well. And Zomato, I would say 230 should be the level to watch for. That acts as a crucial support. Below that, it could bring in some weakness. But till then, I think the stock is good to hold and wait it out.
And in fact, for Swiggy, the allotment will start today for all the investors who put in their money in the IPO as well. So we'll get to know whether you've actually got the allotment for that or not. And of course, sooner this week, we will start to track both Zomato and Swiggy very, very closely for all of you to really see, which way both of these food delivery stocks are really going. Another space that's catching my attention is something that I mentioned also, the hotel space, Vaishali. EIH is now 6.6% higher. You have Samhi Hotels that's 6% up, Chalet Hotels that's up 4.5% higher. Then you have Asian Hotels, Royal Orchid, Taj GVK, all of them in thick action. Do you think it's the year-end travel tourism play that is going to be bringing this theme back into fore?
Oh yes, we start with Indian Hotels, gave us a super run. It's still going strong. Along with that, we see Chalet, Oriental Hotels, all these, the hotel industry on the whole is doing very well, and that we can see it's quite visible on the charts. So yes, we have a positive bias on these.
Sakshi, one of the interesting stocks to look at is BEL. Lots of how should I say, quality buying happening all of last week, and this is something to look at. Vaishali, almost 300 for you, and it tested the 200-day moving average on 25th of October. What do you think on BEL?
Well, so as a disclaimer, I must say that this has been recommended as one of our Diwali picks, and I think the trend is good. We are seeing a minor consolidation,
Yes.
so I would say 280 on near term to those who would want to see a fresh entry. 280 would act as a support, and I think one can look for a target of 330 to start with.
Okay.
Yes,
got
and
it.
because you and I track a common software, Vaishali, the weekly ATM tick is there, just in case you've missed it. But just look at it, and maybe that is signaling something. Keep an eye out, ladies and gentlemen, on BEL. Of course, your financial advisor is better placed than us, but this is at least something that should be on your radar. Sakshi, yours.
Absolutely. We'll keep an eye out on this one. Let's see. I think more and more sectors are now showing us some strength coming back. The Nifty bank is toggling around the flat line right now. Within the banks that are now moving up slightly, our IDFC First Bank 1.2%, SBI was already up. Kotak, HDFC and ICICI are also showing just some green ticks coming back. Then you have the financial services space that's also moving up, 0.2% higher in trade for this one. Of course, led by PFC REC. Chola is up by 0.5%. You have MCX that's moving up, Bajaj Finserv, Shriram Finance. These are the stocks that are also inching higher in trade. But it's the IT space that's definitely at the top zone, 0.9% higher in trade. You also have the auto in the fastest lane, about a percent higher as well. IT and auto are the clear winners, and financial services now slowly and gradually also making its presence felt in the markets right now. What else can we talk about? Let's look at let's look at the beyond the top 5 movers on the Nifty. Let's look at the auto space, especially the two-wheelers now, Vaishali. Eicher, Bajaj Auto, both 0.5% higher in trade. Versus the four-wheelers, how are you looking at the two-wheeler space?
So I think yes, Bajaj Auto, Hero Moto, they look quite good. Overall, if you see, IT sector is bouncing from the 200-day moving average. And if you see Bajaj Auto, Hero Moto, they all have similar patterns. So I think Bajaj Auto looks quite positive at these levels. Good consolidation after taking support at 200-day. And well, it should at least, a trading strategy can be created for a target of 10,100 to start.
Got it. Tata Motors is now up 2.7% at 827.5 odd levels. Do you think the worst of the fall is behind, Vaishali, for Tata Motors?
I think so. I mean, I have been watching this stock, and I think the stock right from 1160, if I'm not mistaken, that was the high that we saw some time back. And from there on, it has retraced so much that I think this is quite an attractive level. I was ready with this. I mean, 790 was my final support to expect a bounce. And I think we saw a low of 792, if I'm not mistaken. Yes. And from there, we are seeing a bounce. So I think it is a good level to start accumulating. शैल जी आप बता दीजिए.
Okay, so that's the view coming in on Tata Motors. Ma'am, I will just keep quiet and not stick my neck out. But this was the first stock we discussed in the morning. I have pointed out whatever are the good things. The rest is for the market, and of course the fact that one needs to be fearless when everybody is cowering in fear, and perhaps that's the time for Tata Motors. But again, your independent financial advisor is better placed than at least me. Vaishali and I have discussed these stocks many times in our normal conversations which are off market, but I think now is the time. Let's look at volume buzzers, and it's looking good. The broader markets are showing signs of resilience. Is this a dead cat bounce? Only time will tell. But keep this in mind, that the Nifty has turned green at a time when only 688 stocks are in the green versus 1574 in the red. So advanced decline is easily 2:5. For every 2 stocks that are rising, there are 5 that are down. And when Sakshi and I started the conversation, 19 indices were in the red. Now 4 plus 4, 8 are in the green and 11 are in the red. So this bottom which is there on the market, whether it's short covering, whether it's value buying, only time will tell. But you see some sort of activity on the green side that is acting and helping the markets on the way up. Shipping Corporation now 13 percentage points higher. Keep an eye out on this one, ladies and gentlemen. When you look at the valuations on some of these PSU stocks, they provide a very good picture. Now the only issue is that the broader markets are no longer in the uptrend that they were about a month ago, and this is the reason why you have pain. It's available at a PE of 11. I'm talking about Shipping Corporation. Market capitalization is 11,000 crores at a price of 238. The 52-week high was 385, and there is nothing positive that I can tell you, except for the fact that if you look at the top line, that's somewhere like 5,700, and it's a hugely profitable PSU. 1,000 crores is the trailing 12-month profit. So this is something that you can look into even financially. Vaishali, what catches your interest? We are at 956.
So one of the stocks, well, there are 2 to 3 stocks that I like right now. One is Engineers India, 190. I think this stock is well corrected and technically very well placed. So one is Engineers India. I would say it's a buy with a stop loss of 177. Look for a target of 240. The second stock we spoke about was PNB Housing. So that has surged high. I think that is doing well. And the other stock that I do like at these levels is HAL, Hindustan Aeronautics. If you see, it has taken a cluster of support at, I think, around 4,100 levels. So I think this stock should do well. It is showing signs of reversal. First target would be around 4650.
Okay, 4650 could be seen on HAL. We'll keep an eye out on both HAL and BEL right there that we have discussed today. Just about 3 minutes to go before we wind up the morning edition, viewers. The good part is that the Nifty is in the green, 14 points higher in trade at 24,162. We'll look at it as to whether this improves as we move along going forward from here. We can definitely see the Nifty bank now coming into the green, and it's the private banks that are now supporting the sentiments as far as the Nifty bank is concerned. HDFC Bank is now nearly 0.4% higher. ICICI Bank is just 0.2% higher. IDFC Bank and Kotak Mahindra Bank are also inching up. We'll look at how the Nifty Bank really pans out from here as well. But we'll take the last word from you, Vaishali, and yet again circle back on Asian Paints, which has been the top laggard in the morning session today as far as the Nifty is concerned, 8% down in trade. Brokerage houses are now looking at further downgrades on this one. Jefferies has given a target price of 2,100. That again points to a further 25% lower levels from the current levels. Do you think the pain is only going to escalate from here on from Asian Paints, and how would you advise an average investor looking at this one right now?
I would say, well, give it a miss right now. There is nothing, nothing to support a view for a buy. So I would say let's wait for some stability to occur.
Right.
With that, ladies and gentlemen, let's call it a day on market today in the first session. The Nifty has behaved admirably from a recent low of about 24,030. We are now at 24,167. Primarily, IT and banking stocks are helping it on its way up. IT index is a strong gainer, 1 percentage points higher. and the broader markets are also looking up. Let's hope it lasts for a while, but stay tuned to Market Today and Business Today Television. There is lots and lots happening on the other side of the break.
Have on this panel. Let me introduce you to all our panelists. Well, Shefali Garadia is the chairperson of Deloitte South. Last year, in fact, marked a significant milestone, as this was the first time when a woman was to chair a Big Four firm in India. So thank you so much. We're proud to have you. We have with us Radhika Gupta, MD and CEO of Edelweiss Mutual Fund, and there can